If you're feeling stuck right now in your trading and you're just looking for a mechanical trading system to get you out of the mud, something that offers a high win rate and a low risk to reward system, then my fair value gap continuation strategy is going to be perfect for you. In this video, I'm going to be breaking down and giving you completely for free one of my best FEGC setups that requires no higher time frame bias or context at all. Now, this one setup has helped me maintain a 14-week payout streak with Take Profit Trader. These are the emails just for a little bit of proof. If I click into one, you can see it's completely legit. Go back, there you go. Now I post all my payouts to my Instagram, my Discord, and I even withdraw some live at the end of trading weeks as well. So you can obviously see that I'm trying to be as transparent as possible. So without further ado, let's just get straight into the breakdown. So for step number one, we're going to be looking at the trading session, the ticker, and the time frame we're going to be looking for. So the trading session is going to be from 9:30 a.m. to 10:15 a.m. Eastern Standard Time. This is going to be the New York Stock Exchange Open. Right, the ticker is going to be NQ futures and the time frame is going to be the 30-second time frame. For step number two, we need to understand the three different fair value gap delivery types and what we're going to be focusing on. So in front of you, I have three different examples where price is delivering off a bullish fair value gap. Over on the far right, we are not going to be looking for this one here. This one is a very low probability delivery. You can see that price has closed beyond the 50% value of this fair value gap. In the second example, we are not also going to be taking this one because price has closed inside of this bullish fair value gap. This is okay to take, but for this setup specifically, we are going to not focus on this one. We are only going to be focusing on this one where price has only wicked into the bullish fair value gap with no body closures at all. It does not matter if the wick surpasses the 50% value, as long as there's no body closures in the fair value gap, you are okay. So I refer to this strategy as my fair value gap continuation with no FEG or short FEGC with no FEG. So what does that actually mean? Now the FEGC is just looking for a fair value gap continuation, but the no FEG is a requirement for this specific setup. You don't want any obstruction FEG in your way from the swing point of the highest price and the retracement low where price is typically delivering off the fair value gap. So you can see in this case, this is the highest price over here, and this is the lowest price right here. And if I was to look as if I was looking this way with my eyes, right, I can see there's no bearish fair value gap in the leg that is going to obstruct price from continuing higher. This goes for the same on the bearish setup. So as you can see, this is the swing low, the lowest known price, and then this is the swing high. So this is the highest known price of the retracement, and this is the lowest known price of the swing point. If I was to look from this way, you can see that there's no bullish fair value gaps obstructing price from continuing lower. For step number four, we need to cover how to actually enter these positions. So we've already had that indication that price is going higher or lower. We've already got that indication that price is now delivered into the fair value gap, which is a requirement. And now all we need to do is look for the entry. So once you have that delivery into that fair value gap, you are going to mark out your previous candle high, right? And over here, your previous candle low. And all you're going to do is wait for price to body close above that previous candle high or body close below that previous candle low. That is exactly where you can take your entry for each buy and sell position. So for step number five, we need to understand where to place our stop loss now. So we've already got our entry, which is the candle closures right here, but where do you place your stop loss? Right, you're going to place your stop loss below or above the highest or lowest option. So right here on this bullish fair value gap, you can see that your two options right now would be this retracement low or this bullish fair value gap. So whatever is lower, sometimes you'll have a wick that surpasses the gap, that would be lower. But in this scenario, the fair value gap is lower. So just make sure that your stop loss is underneath that level, rounded to the next 5-point increment. This goes to the exact same over here, making sure that your stop loss is above this bearish fair value gap right here. Right, I don't know why I put an X, and then rounded to the next 5-point increment. Lastly, for step number six, we need to just cover some simple rules. Right, for this setup specifically, you're going to always mark out your swing point like this, your highest price and your lowest price. Now, on your entry candle, I do not want to see a wick make equal highs with the swing point. I don't want to see the wick ever surpass the swing point. I want zero interaction from our entry candle with the swing point. This goes for the bearish and the bullish setup. That is literally the only rule. Zero interaction with the swing points. Also trade my FEGC model live in front of 100+ viewers every single day. I also teach you a little bit more about the strategy inside of my Discord. So I can't show everything on YouTube because I just want to keep it fair to those inside of my premium. But otherwise, if you want to learn, you want to obviously join me alongside me in the live markets, and you can click the link down below and I will see you in the Discord. Otherwise, let's get straight into the chart breakdowns. So jumping into our first chart example, we're going to be taking a look at a bearish setup. So all you can see right here with this gray background, it marks out my 9:30 a.m. window up until 10:15. So any candles in that is in our window that we're looking for. So as you can see now, price has created a bearish fair value gap like this. So we're going to mark it out with our rectangle box. All we want to see is a wick delivery from this level. Now, as soon as price wicks into this level, each previous candle that it does, we're going to simply just mark up each previous candle low. Now, I missed the first one, but we'll mark out this one instead. And we'll just play until price is able to close below the previous candle low. So we keep going. So we're going to mark this one now. Let's wait. All right, so right here, we get that candle close below that previous candle low. So I'm going to place my short position. I'm going to take an entry right there. I'm then going to put my stop loss above the highest option, which is the fair value gap. Now, this one exceeds 40 points, which I said we don't want to do. So what we're going to do is we're going to choose the second option to put it above. So right here is 32.25 points. I'm going to round up to the next 5-point increment, which is going to be 35 points, just like that. All I'm going to do now is just target a 1-to-1 risk to reward. So when I find my stop loss, I'm able to find my take profit. And if I play price out, we hit take profit. So for our bullish example, what we're going to be looking for is price to obviously give this continuation setup in a bit more of a rangier condition, just to show you that you don't really need trending days. So right now I'm going to be looking for a bullish example, even though we're making lower highs consistently. So I'm going to mark out this bullish fair value gap, which I can spot in the market that price is about to react off. All I'm looking for is that wick only delivery, which we get right there. As soon as we get that, I'm going to start marking out those previous candle highs right there. And all I'm going to look for is a candle close above. So I'm going to mark the new one. And right there, we're able to get that candle close above the previous candle high. So I'm going to take my entry right there, my long entry, put my stop loss below this level. The fair value gap is significantly lower than the swing point. Now you can see it's 17.5 points. So I'm going to round up to the next 5-point increment, which is 20. And I'm going to target a 1-to-1 like that. Now play price out. And just like that, we were able to hit take profit in about 4 minutes. So that is all for this video. I encourage you to go to FX Replay or any other back testing software. And I encourage you to test this model to see if you can pass a prop firm challenge or reach payout or just find consistency with it. Let me know how you go in the comments below. If you like this video, subscribe, obviously like the video, and I will see you all in the next one.